Hello everybody, it's August 5th, 2022. Let's take a look at Bitcoin. So on Monday, I said, we were following through on the expectation I had of a pullback into the 21.9 to 22.9 area. We just struck the top of that zone as of Monday, right around that 22.9 area. And I was anticipating we'd likely push a little bit further down, closer to 22 before this correction was over. And then I laid out the four paths right here that were most likely in that action. So let's go over them again. First up, on Monday when I did the video, we were right about here. And I was looking for a wave 4 pullback within this diagonal structure and then a move down to this green box right here. You can see it instead did a fake breakout of this and then came down and hit that low anyway. So a lot of times you see this happen when we've got what should be a 5-wave move down. This is a C wave, so it should be 5 waves, and it started like pretending to break out here, but it really hadn't done 5 waves yet. So having it come down for a 5th wave, even though it broke that diagonal structure, was not a complete shock. And to be perfectly honest, we may or may not be done. Like, we could still go down into that area from here. So I'm not fully convinced that we're done with this correction yet, but it does remain support, in my opinion. Anywhere down here remains pretty good support. So this is just basically turned into more of a broadening wedge sort of a deal instead of a typical diagonal. They take many forms when they're doing these corrections. So I think we're probably done. With this potentially being a new 1-2 off of the low, and then pushing us up higher into this box here. But like I said, we could visit this area again, and there's really nothing wrong with that. Just depends on how many times it wants to hunt those stop losses basically below the lows. But I don't see anything concerning about this action. I mean, there's certainly nothing immediately bearish about this. We don't have a 5-wave impulse down. We could barely do a 5-wave diagonal down. So that is good news for the bulls, in that even if we do go further down, it's unlikely that we're going to go significantly further than the bottom of that green box basically. So assuming that is the case, and assuming that that is the bottom of that, then in the yellow scenario, what we have here is off of this wave 4 bottom right here, we have an A and a B in place for wave 5, and so we should now see a C wave up for that wave 5. And that 5th wave can go pretty much anywhere, that C wave can go anywhere between the 618 and the 1236. That's the typical target for C wave, with the kind of ideal target being this 1.0 extension. So about 26.5 is a really, really ideal place for this to target. It may or may not go higher than that. And roughly we can use this diagonal structure here, this yellow one, as kind of our guidelines a little bit for what it's probably gonna end up doing. It can certainly, sometimes we see 5th waves extend, like sometimes we'll see it kind of overshoot the top of that channel, and then we get the breakdown from there. There's nothing wrong with that if that's what it ends up doing. But anyway, this big red box, pretty much anywhere between 24.8 and 27.5 are the main targets for this 5th wave. The alternatives that we have, I've explained before, I'll explain them again, are that instead of that being the end of the 3rd wave, that was just the end of A in 3, and then we have B of 3 here, and then C of 3 up higher. So basically, if we overshoot this by a significant amount, then that sort of becomes the primary, although I'll still be wary at that point. I won't really want to get aggressively long, but it's something we'll have to track, that this could be ABC up in 3, and then we may get a move over for a 4, and then one more high still before this is completed. I don't think that's the highest probability path though. I think we're going to complete that 5th wave right there. And this is a pretty decent 5-wave move off of the low. It's a diagonal, which is lower probability than an impulse, but it's still a fairly decent move. We've got a 1, 2, 3, 4, and 5, and they're fairly clear, so I don't have an issue with this count. And in either case, we will see a breakdown, because this initial move will be a 1st wave, either to here or in that longer blue scenario up to, you know, basically higher in that 30K region. But basically either way, we should get a 2nd wave pullback then from either one of those highs. And because it's a diagonal, we could see this breakdown pretty significantly from that area. Not unusual at all. Like, we'll draw, once this is done, we'll draw a fib up to the top. Let's just assume it goes to that 1.0 extension, that sort of ideal region there. Normal 2nd wave would bring us to 382 to 618 region, kind of 20.5 to 22.5. But because this is a diagonal structure, it is not out of the question for us to drop even lower down to the 886 or, you know, 764, which is like 18.5. Potentially we could still drop to. So this can easily go back under 20K and still be setting up bullishly. And I guarantee you, if this drops below 20K, a whole bunch of people who bought up here are going to be stopping out thinking that it's going to go to a new low. But realistically, it'll be a pretty good setup for a 1-2 and then a strong rally off of that into the 3rd wave. So that's my primary scenario. Alternatively, we've got the orange scenario, which still technically could be valid, where we're not even done 4 yet. So if this breaks down significantly below here, that would be the primary scenario, rather than just expecting new lows straight away. I would think this is an A, B, C basically in a 4, and then we would be restarting this 5th wave essentially, and we'd likely see a 3-wave move up in that, although it could make a more direct 5-wave move up as well. That is a possibility. So basically, if we come down and touch this trend line, then I'm going to say we still have a 5th wave up, but we're just resetting this wave 4. So not worried about it, even if it falls down at this point to about 20.7. Below that yellow line, it starts getting a little bit fishy, and that would be a bad sign that potentially the bearish count is playing out, which is in red, W, X, and Y. Even if that red count does play out, I mean, potentially it could have ended here, but it could go up a little bit higher and still be bearish. I just don't see that as high probability, but this could be W, X, Y, and then death from there to new lows. So that would be the bearish scenario, but I don't see evidence currently of that. If this truly were the case, we would have expected, because the entire move down that we've seen so far, all of this selling action downwards has been impulsive. And so if we were going to get another leg down, it would start off as an impulse. And we don't have that right now. Like I said, the best case we have is a pretty poorly formed diagonal down. So, you know, if it was going to start off a new leg down to new lows, this really would have formed as an impulse. So I'm not too worried about that still. All right, so I think that pretty much sums up all the possibilities. Main thing is, you know, if we're above 21.9, I'm expecting these levels sooner rather than later, with 27.5 sort of being the top of that, and 26.5 I think being a reasonable assumption. If we go down further and we hold this yellow line, I still expect that we go up from there. It's just not as clear where we go, although I would still expect somewhere in that 26 to 27 area. And then if we start breaking down below the yellow line, then we're in trouble. So that pretty much sums up Bitcoin. And I will touch base with you all on Monday again. In the meantime, make sure you hit subscribe, hit the like button on the video, help me out. So I keep making these videos for you and making sure no one gets wrecked and knows when to take profit. All right, everybody, you have a great weekend. I'll talk to you on Monday.